Hey, it's James here, and in today's video, I'm going to talk about a Bitcoin market cycle chart. I also want to talk about a Microsoft chart so that I can show you guys an important lesson that if I don't do anything else, if I don't accomplish a single other thing on this channel, I am going to make people realize that when you look at an investment, you are not measuring that investment and how it performed versus US dollars or versus any other fiat currency. You should be measuring that investment of how it performed against the broader market. If your Bitcoin or your stock goes up from $1 to $2, that's wonderful. But if the cost of a cup of coffee went up from $5 to $50 in the same time, you lost. So the first chart we're going to take a look at is Microsoft versus the QQQ. We're going to look at this because I just saw yet another self-appointed Bitcoin influencer talking about how the people who lose are going to be the people who sell, and the people who got rich with Microsoft were the ones who held on. Well, this is a Microsoft chart versus the QQQ. So if you held on, I don't know why you'd be happy about that. It's currently worth less than it was at its 1999 high. In fact, it is currently down about 30% from its 1999 high. And if you were unfortunate enough to hold it from the top in 2002, you're currently down 52% versus the QQQ. Why would you be excited to hold on to that? Your money would have been better invested in the broader index fund, depending on when you invested, obviously. But see, people talk about that, and what they're looking at is they're looking at this chart. But look how good it did versus US dollars. Great. It did well versus fiat, but so did the QQQ. QQQ was a better investment for most people. So when you measure Bitcoin and you do this and say, look, look how great it's been the best investment of all history, put it on a log chart. It was down here, a penny at one point. It's not even showing on this chart. And now it's, $73,000. It's just the greatest thing since sliced bread. Yeah, except you can't use the price history from all this time back here when it was a micro cap because it's in price discovery. I've talked about this in previous videos. Now it's a mature liquid asset. You really need to be looking at it post 2021 when ETFs got approved. And since 2021, when the ETFs got approved in February of that year, Bitcoin has went sideways. If we look at it versus the QQQ in previous videos, I talked about how this was the 2021 high, which was actually just a bull trap. It failed to take it out and hold that level. Then it retraced down to the 2017 high, failed to hold that level, and now it's sitting at a multi-year trend line. And so far, it's a little early to say, but so far it's struggling to hold that line. Sitting in Bitcoin and saying, yeah, I bought it at 60,000 in 2021 and now I'm up at 73,000. No, you're not up, you're down. Because that tiny bit of appreciation was simply the side effect of inflation. Cars went up in that time. Houses have went up in that time. Minimum wage in many areas went up in that time. The cost of living increased in that time. In fact, the government's, spouts these numbers like 3 and 4% annual inflation. We all know better. Anybody that lives and spends money on a daily basis, we all know that the real inflation was not 3 or 4%. When I could go out and buy a 2-liter of Diet Coke 6 years ago for 99 cents, sometimes 88 cents, and now they're $2.97. That's not 4% a year inflation. When you could go buy a gallon of gas 6 years ago for $2, and now gas is over $4, that's not 4% inflation. When you can go out and buy a house in 2020 for $250,000, and now houses are $400,000 and $500,000, that's not 4% inflation. It's a silly thing to think that you did well holding Bitcoin and you appreciated from 50 or 60,000 to 73,000 when the QQQ in the very same time doubled. Like, really think about this. The QQQ from February of 2021, which is when the ETFs were approved on Bitcoin. What did Bitcoin do? Let's just look at it in US dollar terms. This is easy for people to understand. So in US dollar terms, it was approved toward the end. I think it was February 8th, not really the end, but it was sometime around February 8th, if I remember right, when they got approved, the ETFs. So yeah, so this candlestick, they got approved. Okay, so if we draw a line right there, it was $46,000 So if you invested that day in the Bitcoin, you are currently up roughly 58%. But if you invested in that exact same day in QQQ, not counting dividends, in fact, let's just put the dividends in there. So if you invested the same day in 2021, right now, you would be up roughly 127%. I'm willing to bet that you would rather be up 127% versus the 40 or 50% that you'd be up on Bitcoin. Not to mention, QQQ is backed by real companies, and historically speaking, it has a long track record of doing very, very well. Even if you invest at the top of the dot-com bubble, you'd be up about 7% annually today. Bitcoin, on the other hand, only has a 17-year history, and so far we've never seen what Bitcoin will do in a global bear market that's like an extended bear market. People say, no, we saw what it would do in 2022. Yeah, well, what happened in 2022? The QQQ fell about 30%, and Bitcoin fell over 70%. And that was a short-lived 12-month bear market that then was reinflated by the AI bubble. What happens to Bitcoin when you get a bear market that takes 16 years to make a new all-time high, which is what happened in the dot-com bubble, roughly 16 years, about 15 years. And that's not inflation adjusted. Inflation adjusted, it took even longer than that. So what happens to Bitcoin? Yeah, it was 16 years when you don't count dividends. What happens to Bitcoin in this environment? And it's not that I know what'll happen, because I certainly don't know. I don't know what Bitcoin will do, but neither do the people promising you that it's going to be worth 400, 500,000, 800,000, a million, 5 million, 15 million. They have absolutely nothing to base that off of. We do not know what Bitcoin will or will not do in an actual risk-off, long-term bear market. My guess is Bitcoin will fall harder and faster, like it's done in the past. We'll probably end up bottoming somewhere around a 90% drawdown, 95% drawdown from its all-time high. Again, if we get this, and my guess is it will then accumulate and range sideways for a few years before it starts a new macro cycle, which could then last another 15 or 20 years from that point forward. Another thing that I see all the time with Bitcoin, believers, is they just don't understand even the basic fundamentals of Bitcoin. I saw some guys saying, Bitcoins are still being mined, 40 and 50 years from now. And not really, okay? Not really. Because here's what's going to happen. By 2040, most of all of the Bitcoin will have been mined. It will still take roughly 100 years to mine the last few Bitcoin, but for the most part, most of the Bitcoin will be mined by 2040. And in my mind, that's a really big problem because Bitcoin runs on proof of work. And so the Bitcoin price has to appreciate enough to justify the mining expenses of mining Bitcoin. The less Bitcoin that they're mining, the more Bitcoin has to be worth to justify that. Now, bulls use that as a narrative to say, yes, that's why price has to go up. That's not actually true. It's actually an inverse relationship. If price doesn't go up, that's what causes the network to become a problem. That's what causes the network itself to potentially enter a death spiral. Now, the algorithm itself, it adjusts the difficulty based on the number of miners. But if you get a small enough network where not enough people are mining, then Bitcoin itself becomes open to 51% attacks. So Bitcoin's price has to appreciate in order to maintain the viability of the network. It doesn't mean it will appreciate. It's actually a flaw. A lot of these mining companies, a lot of these large mining conglomerates, they've actually been rotating away from mining cryptocurrency, and they're rotating their resources to AI. So the network itself is losing some hash power. And eventually, again, we don't know, but if price collapses and stays depressed, the mining rewards are not going to increase. They're not going to suddenly mine more Bitcoin. It is what it is. What's going to happen is there's going to be less miners. So there's a lot of things in play here. And again, this isn't about saying Bitcoin is bad, Bitcoin goes to zero, you shouldn't invest in Bitcoin. That's completely up to you. What it is saying, A, always compare your investment to the market itself. What would the market return to me? And also compare it to what bonds return. Like bonds are more or less risk-free. There's always some tiny risk involved, systemic risk and things like that, but they're more or less risk-free. So what is that going to return? What am I making extra that justifies the risk that I'm taking? And of course, with Bitcoin, it now has a negative Sharpe ratio. It went negative in 2024. So right now, Bitcoin is not appreciating enough to justify the risk involved. That means that right now, from at least an institutional standpoint, there's not enough like upside to justify the potential downside in Bitcoin. Invest in it if that's what you want to do, with the knowledge that you may lose everything and you may not. But do not believe for 1 second the Kool-Aid drinking crypto bros who promise you it has to go up. It doesn't have to do anything. Hit the thumbs up button, subscribe to the channel if you like data-driven content. As always, please remember that I am some guy. I'm sitting in a spare bedroom. Nothing. The video is financial advice, and you should always go out and do your own due diligence before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Thanks for watching. Share the video with a friend. And as always, please remember to invest and trade safely.